The next section talks about 5.3, the bank statement reconciliation. The term reconciliation means to agree. We already talked about how back in the day, we would be required to maintain our own checking account balances. We would receive a bank statement every month, and we would take a look at the bank statement and compare it to our check registers. You saw an example of a check register. We would compare the balances to see, well, do they match? And often they do not match. Just because they don't match doesn't mean that anything is wrong, but in order for us to confirm this, we have to go through a reconciliation process. So these differences, the differences between what is listed on a check register and what the bank statement shows, we call those reconciling items. And what we want to do is take our check register, make whatever necessary adjustments are to that balance. Maybe the bank is going to show us that something occurred that we had not recorded, and so make those adjustments. And then we're going to take the bank balance and adjust it based upon, in most cases, it's timing errors. And we'll take a closer look at that in just a bit. And the objective here is to be able to make the adjustments to the check register, make adjustments to the bank, so that when we've made those adjustments, we come up with new balances, and then those two balances must agree, which means that the bank account is now reconciled. Now, when we get the bank statements, we're going to be looking for fees charged by the bank. We're going to be looking for a deposit check that may be returned due to insufficient funds. We don't even know about that. A scheduled deposit may not have been made. So if we receive money and maybe we thought that, we're going to record that in our register immediately, but maybe it didn't get deposited till the next day or the next weekend or after the following weekend, well, we're going to show in our accounts that that money was received, but the banks are not going to see it yet. So that would be an example of when a scheduled deposit may not have been made. The account holder may have made an error in a check register or when entering data into the firm's computer system. So that is an example of something that can go wrong. If we make errors, the only way we can know that is if we compare it to what's on the bank statement. Electronic payments may be for an incorrect amount, or two payments may have been made when only one should have been made. And then bank employees may make errors as well. So we're looking for errors, we're looking for timing issues, we're looking for legitimate charges that came through the bank statement that we didn't even know about. And when we look for those things and we find them, then we can find a way to do a reconciliation. A reconcile a bank statement is the process of checking the bank statement against the check register, and reconciling the bank statement every month for every account is an important step in preventing employee theft, in making sure the numbers are correct. It's very valuable. So this is something, even on a personal level, that most of you should be doing to make sure your account balance are accurate. Oh, one other item that was listed there, that the terms checks outstanding. Most of you don't even write checks anymore, but you may at some point in time in your life, and there may be a good reason for it, but companies still write quite a bit of checks. And when we write checks out, we put them in an envelope and we mail them off. Now, we've updated our bank balance to know that that money is already gone, even though it hasn't cleared our bank. That money's gone. We can't spend it again. We can't send another check out for that same amount if that money is no longer there. This timing issue, when the check has been issued, put in the mail, sent off somewhere, before it has cleared our bank, we refer to that as an outstanding check or checks outstanding. Okay, so here's an example of what a bank statement might look like. Here's the example of what a check register would look like. We probably should blow this up a little bit. And when you see it, you'll see that there's an account number, which is the bank account number. You'll see a previous balance. You'll see all the total. A summary is at the top showing all the amounts of money that were deposited and the amounts that were taken out. And then ultimately you have a new balance. See, this is what's going to be the most important, is the present balance or current balance or ending balance. In this case, it's $6,892.41. And then you'll have the detail listed at the bottom, including electronic deposits, other deposits, then checks that were paid, checks paid including the check numbers and the amounts and the dates, and then the electronic withdrawals and electronic payments as well. Okay, so all that, the detail is going to be listed on the statement so that you can then use that as a way to reconcile your bank statement. So let's go ahead and use the statement here to see how this will all work. The bank statement of Rose Gardens shown above shows a balance of $6,892.41. And like I mentioned before, that's where we got it. The present balance, the current balance, the ending balance, all that is what's listed here. After a bank service charge of $6.42. So this is notable because a bank fee can vary from month to month. And so therefore, it's not likely that we're going to be recording in our records this bank service charge until we actually receive the statement. In addition to that, we have a charge, but we're also earning some interest. And in this case, we earned 78 cents in interest. Now, if we look at our check register, the check register is showing that our balance is $7,580.38. The bank says $68.92.41. Our register says $75.80.38. The obvious question is why? Why is there a difference? That's what the reconciliation process is about. So the first thing we're going to do is get our register out and figure out which checks have we written on our registers, which checks have we written out and have sent out that we've already deducted and it's already removed from our bank account balance. What checks are listed and have not cleared, we refer to those as outstanding checks. In this example here, there's check number 846 for $42.73, 852, et cetera, et cetera. These are all the checks and the amounts that are outstanding. So after listing the outstanding checks in the space provided on the form, the total is now $949.66. So when we've added all of these amounts, these outstanding checks, the total is $949.66. I think we have on the next page an example of how it's all going to look. All right, so here's the reconciliation and how it would look at the bank. Often in the back of the bank statement that you receive, you'll have a reconciliation form, and this is what it often looks like. We're going to start with number one, enter the new balance from the bank statement. So the new balance was $6,892, and that came from the bank statement. Now the textbook asked us to look at the outstanding checks. We've done that. That's going to go under line number 4 here, the total outstanding. And what that means is that these checks have already been deducted from our register. We've already accounted for them, but the bank doesn't even know about them because they haven't cleared. So that's a reduction or subtraction of the bank statement balance. So our first objective here is to find the adjusted bank balance, okay? Now, in addition, so we have the beginning balance, the balance that came from the statement. In addition to what may be outstanding in checks, we also want to look at any deposits in transit. And this is really the same thing as outstanding checks, except it's deposits. So in other words, Rose Gardens had deposits of $892.41, $739.58 that were recorded on the books or on the register. But for some reason, probably a timing issue, it wasn't listed on the bank statement. Imagine that if you receive the money late at night on a Friday on December 31st, well, that's your money. Maybe you put it into a a drop bag, a money bag, drop it off at the bank, but the bank doesn't record it until the following month. So January 2nd or 3rd. Well, your bank statement that you receive for December, that ends December 31st, is not going to show that deposit. So it's going to be a deposit in transit. Money that you're showing on your register is being received, but the bank doesn't have it on its records yet. It's a timing issue, right? So what we need to do is we have a listing of 892.41 and 739.58. We need to add those up together, right? Let's go see what those add up to. We're going to list the new balance from the bank statement, 689241. This came from the statement. Now we're going to add the deposits in transit. After we add these two deposits in transit to the bank balance, we get $8,524.40. So this plus this plus this gives us this, 8,524.40. Now, step 3, we subtract the outstanding checks, which we already went through. 949.66 is what we added up here. And we subtract from the 8524.40, which now gives us an adjusted bank balance of 7574.74. So now we can stop with this. We can stop. Okay, this is our adjusted bank balance. Now we're going to go to our check register, and I think the instructions told us that we have a check register balance of, current balance is 7580.38. So that's what we're going to put here is our checkbook balance, 7580.38. From here, we go through and see and figure out, okay, what were the fees that we were charged that we haven't recorded on our books yet? What fees or what charges did we get? So let's go to our bank statement here and see if we can find a bank fee. Looks like on 11/30 there was a bank fee service charge of $6.42. So we don't have that recorded in our register yet, so let's do that. Let's go ahead and subtract from our statement or our register balance of 7580.38. Let's subtract the $6.42. If we do that, then we end up with a balance of 7573.96. 7573.96. Now the question then is, did we earn any interest? So let's go back and look to see if there's any deposits of interest. And it appears there was on 11/30, there was a 78 cents interest credit, 78 cents. So that was also omitted from our check register. So we're going to add that in. So we're going to take, just to review, we're going to take our checkbook balance of 7580.38, which was provided to us. We're going to subtract any bank fees. We're going to add any interest earned. And that's going to give us an adjusted checkbook balance of 7574.74. Now, if everything else is accurate and correct, then this adjusted checkbook balance should equal the adjusted bank balance. These two should equal. And if they do equal, then we have reconciled the account. Remember, reconciliation is to agree. Those balances agree. There's some other hints here as why a check account might not be in balance. Forgetting to enter a check, a debit or electronic payment, or an ATM withdrawal. Transposing numbers is often a very common error. 961.20 is entered into the book when in fact 916.20 was supposed to be entered. So we entered 961.20 when we should have entered 916. That's a transposition error. Just flip two numbers. We may have some additions and subtraction errors. We could be forgetting to subtract one of the bank service fees, such as those charged for return checks. And sometimes we have bounce checks or deposits that not made on time, or service charges. So those are the kinds of things we're going to be looking for if it doesn't appear that our bank balances, even after doing our deposits in transit and outstanding checks, if something just is not working, that's often what we can do. Example number 2, using the information on the following check register and bank statement, reconcile the checking account. So you can go through the same process we went through. Something that you can take care of. It'll be the exact same process. And that completes 5.3.